And I said, yeah, that's a good white paper. It's a good idea, but will it get banned and will it get copied? And the truth is, it got copied 6,500 times.
Yeah, exactly.
And so the difference between today and then is, today I can look you in the face and say, yes, it's a brilliant idea. It's not going to get copied. It's not going to get banned. And 300 billion people, $300 billion worth of money agrees it's a good idea. That's the difference. It was a good idea then, but the risk was 100x. And you're getting paid for it. You get paid for that risk return. Today, you don't get paid that much. You still have a big future in front of you, but the real question is, will it be copied? Will it be banned? And once people understand it's not going to be copied, well, will it be copied? Will it be banned? Will it fail? Well, it hasn't failed. People try to copy and that didn't work, and it hasn't been banned. It's not going to be banned. Once those three things, you're past them, now I can put 100 million on the network. Yeah. Now I can put $1 billion on a network. If I'm laying the blueprint for a publicly traded company to buy this stuff, then people can follow in my footsteps, right? Someone needs to do it this year. Yeah. Next year, you'll see more. And the next year after that, more. It's probably another 10-year run, you know? It's like it's going to, Bitcoin is going to be driven by adoption. It's going to be driven by technology. It's going to be driven by asset inflation. Those three things in the near term over the next decade, and they're big drivers. They're like 15% each a year drivers, right? Because, you know, when Apple Pay and Google Pay plug into Bitcoin, that's going to be massive. So that adoption, the tech integration drives adoption. When billionaires and billion-dollar investors and billion companies, when they adopt it and put money into it, that's another massive driver. And then as the central banks, of course, that's a massive driver. Yeah. In Argentina, right? They set it on fire, right? So those three drivers will go for a decade. After that, as Bitcoin matures, then you'll see the fourth drive will be economic productivity of the cyber economy that has embraced Bitcoin as the Treasury Reserve standard. So people that have adopted the Bitcoin standard to save their wages, their earnings, their cash flows. If they generate cash flows and they sweep them into Bitcoin, then of course the value of the ecosystem will grow because the currency is deflationary. So if the Bitcoin economy grows by 3%, Bitcoin will go up by 3%, right? That's the classic Austrian economics interpretation of deflationary money, right? Fixed money, 21 million coins, and you divide everything in the economy that has adopted Bitcoin by 21 million, and that's the value of a Bitcoin. And so that's a second order driver, because the first order drivers are going to be adoption, technology, inflation. That's what I say on another one of my interviews to Keith from Hedgeye. You know, he said, I got this model, the quad 4 model, and it's like deflation and inflation does this and Bitcoin will do that. And I said, Keith, all these models work when you have a fixed pool of capital and a bunch of people that are like-minded, that use the same models, that trade with each other on the same metrics, the same way, and they go around in circles. But the system is not a closed system with limited capital, with people that think the same way. What happens when 10 billionaires all say, I bought it, I'm going to buy more, I'm not ashamed of it? And when 10 billionaires come and they put $1 billion each, all your models are destroyed. They don't work anymore.
He didn't get it. He sold them. He sold all of them. Since Keith sold his Bitcoin, it went up 80 or 90%.
What I see is there's a lot of people in the finance world, Mark, that they don't reason from fundamental first principles, like an engineer. Yeah. They reason from metaphysical models that are, they're like, well, I look, like people go, well, Bitcoin has traditionally had this certain volatility, and it, you know, it's like, well, the past is not the future. It's like, well, LeBron James at age 13 had a temper tantrum on the court, and he's played 100 games, so that means 1 out of 100 games he's going to have a temper tantrum on the court. Well, no, he's not. He was 13. When he's 25, he's not going to act like when he was 13. So looking backwards at a statistical model of an immature asset class and extrapolating forward isn't rational.
Yeah.
If you want, it's like I'm an engineer. You hand me a bulldozer and you ask me how much dirt I can move over the next week. And then there's a finance guy that says, well, I know in high school you only moved like small shovelfuls every day. And so I think you can probably move like 13 shovelfuls because that's what you do on a daily basis. I'm like, I'm an adult and I'm driving a bulldozer, you idiot. It's a bulldozer. I'm not a kid with a shovel in the playground anymore. So why are you applying other models to the future? It's because you're not thinking from fundamental first principles.
True.
Here's the first principle. There's $250 trillion of money that needs a home. Bitcoin has 300 billion in it or 350 billion in it. There's no other option. How much of the 250 trillion is going to move into Bitcoin and at what rate? It's going to be a function of inflation, adoption, which is education, and technology when they integrate it. And so just ask those three questions and stop going back to your model based upon history when none of these things were true.
It's incredible how you definitely matured in the Bitcoin space, and your knowledge is really, really impressive, because I'm in Bitcoin since 2013, but you're definitely better than me now into the whole topic. So respect, definitely. You really did a deep dive in the rabbit hole. So, and everybody loves it. You're already, like I mentioned, you're already a legend, and it's an honor to have you on the show. And I saw it on Twitter. I asked the people, hey, do you have any questions for Michael? And I've received like 300 questions or something. So Marco, for example, asked, are you into Bitcoin for the money or the revolution? But I think you already answered this question, because you're full of passion for Bitcoin and you believe into Satoshi Nakamoto's white paper.
I think it's the critical engineering invention of the decade, maybe of the century. Maybe I would say Bitcoin is a singularity where engineering crashes into economics for the first time in human history. I'm an engineer, and every engineering system, a pneumatic system, hydraulic system, closed adiabatic system, they don't have leaks in them. You can't make any engineering system work with a leak.
Yeah.
Okay. An airplane will blow up, a ship will sink, right? A nuclear reactor will melt down, a steel refinery will blow up. So engineers create systems that work. Every single finance instrument in the world today has a leak in it. All the fiat instruments have leaks. All the currencies have leaks in them. Bitcoin's the first example of something we've got that's sitting on a closed thermodynamic system. It doesn't have a leak. It's an economic system that works.